This is our Forex blog for March 10th, 2014, and these are our currency indexes, which are, in my opinion, one of the easiest ways of trading. My 100% focus is on creating automated systems for my own account, and I also use these exact same signals in our software. So if you're a brand new trader or even an experienced trader and you want to have the computer analyzing about 50 different indicators, 150 plus patterns, fibs, fib pullbacks, fib targets, using all of our statistical tools on a 15-minute statistical high and low, 30, 60, 4-hour daily. We have so many indicators that are in this, and it's over 15,000 lines of code. A human wouldn't be able to watch all those different trade types and patterns. So you can see the pound dollar did pretty good. We had a nice win, small loss, huge win, small 5 to 10 pip win, 20 pip win, 20 pip win, 8 pip win. That's the pound dollar today, and you'll see why the pound did such a good job against the dollar. Here's the euro dollar, which was pretty choppy today, but nonetheless we did okay. We sold here, made a few pips, bought here, lost a little bit on that, lost again. Got long here, pretty much lost 3 pips on that, shorted, made 2 pips, went long, made 10 pips, shorted, made maybe 15 pips, and it's still on a trade right now. But for a currency that's pretty choppy today and with no direction, to be able to find a few bigger wins than what the average loss was is a pretty good testament to how intelligent my trading signals and system is. But you will improve your odds, and this is the best way of trading. You should learn support resistance, Fibonacci, profit targets, fib, time extensions, fib, retracements. You should learn to use our currency indexes, which show you as a graph what each individual currency is doing. And you want to be buying the strong currencies like the dollar versus the weak ones like the pound. The pound was weak today, the dollar was going up, and the euro was going up too. So that's why the euro dollar was choppy. They were both above their hourly moving average. They both were above their previous day's high for most of the day. They both were most of the time above VWAP, which is the yellow line. The green line is the 15-minute moving average. And so in a nutshell, you were trying to buy and sell two currencies that were both strong. The dollar and the euro were strong today. The pound was extremely weak. You'd be better off buying the euro against the pound. So here's the euro pound, strong euro, weak pound, and as you can see, it just went up. And so, when you use our currency indexes, trading's a lot easier. So we have a nice little sideways rectangle pattern breakout, took off, nice little, flag pattern, wedge pattern here that took off. We have a 2-hour rectangle pattern here that broke out. And once the currencies are above our upper containment bands, it's more profitable usually to do counter trend trades. So you can, just simply have your containment bands on there, and I tend to use and look for shorts at the 3 containment band up to 4, and we use the DSP, which is much faster. We'll put the 4 on there. I usually make that yellow on my charts I trade with. And so at this 3 level and above, typically you're going to run out of steam. And a lot of times, one of my favorite patterns is when this level gets hit, and then you make a new high, and it's not actually at the 3.0 band. It's very high probability reversal. You can see that here. It hit the 3.0 band, went up again, wasn't able to hit it. The market's already extremely extended, and you can see the first decent pullback all day. It isn't a huge pullback, but you're fighting one of the strongest uptrends. And you can also use our fib targets to know when to, take profits. Here is the swing low and the first high. The first and second fib targets tend to be when, price is going to run out of steam. And you can also use our trend channels. When you see, especially once it's kind of extended itself, you draw those on there and you project the trend line off the low from the high. And that's exactly where it ran out of steam. And the key to trading, whether you're trading with the trend or not, is to risk small amounts. So if you got short right here with your stop above the high, you can see at least, you pretty much made or had the opportunity to make the same amount. This last trade right here, your risk versus your reward. And as long as you keep that in mind, you should do well trading. There's a lot of things you can do with position sizing. You know, if you have 2 or 3 losing trades in a row, you can always bet a little bit bigger, especially if you're a professional trader that knows your individual statistics and how, you know, the methods are doing. But let's take a look and find some other trades today. The CAD was in a downtrend, but it was just kind of going sideways. So when it broke above the high here after not being able to make a lower low, you could give this a shot by buying at 515. Let's try to find a currency that's super weak at 515. This one, you know, the pound is extremely weak. So the pound CAD is another one that you are very likely to go down at 515. Here it is. It isn't at the lower extreme bands. And you get a breakdown right here at 540 approximately. And it goes all the way down here. You made about 90 pips on that. So there's so many different ways of trading using the currency indexes, and you know, without actually seeing a chart and seeing that, okay, this is extremely weak, but it's not going lower. You know, that means it's been going down for quite a bit. If you scroll back, you'll see, you know, down, huge down. Yeah, you know, there's no more sellers. So you're likely to get a big bounce off of that. And that's why there's 90 pretty much free, easy pips in the pound CAD when that happened. Let's find another one at 515 when this broke out. You know, the Australian was weak, but it worked its way up to the hourly moving average. It's near the upper containment band. It's a pretty high probability that the Australian CAD is also going to go down at 515. Here's 515, and you can see, you know, it does not quite as much as the other one. 15 pips, you sell the next move up. 20 pips, you sell the next move up. You know, 20 or 30 pips. But nonetheless, using the currency indexes, you can find high probability trades. Also, the CAD, when it hits the upper bands, guess what? It's extremely weak. Perfect Oscillator is showing an extreme here. You know, if you sell this CAD at that point, when it's at an extreme, because it's downtrend, versus maybe the Swiss, which is strong and it's just pulled back, the CAD Swiss is very likely to go down at 8 o'clock. Here's 8 o'clock, and guess what it does? It goes down about 15 pips. So using the currency indexes, you can, especially in combination with our currency FX trade signals, you know, if the pound's weak, the dollar's strong, just take the sells. Sell. You made money, lost. Made money. You might even want to avoid the buys, or you can draw your own fib levels or drawing tools and decide, you know, if it hits an area that you want to buy at. This is 1.382. It's much more likely to get a bigger bounce off the 1.6 fib. So you might have passed on that one. And then you can also use fibs and other drawing tools for your profit targets and sometimes make more money. For instance, when this thing's underneath the 1.382, it's already gone down, third wave down just today. You know, it's likely to stall somewhere in here. So you might have got out of this trade somewhere, you know, when it went back above this bar's low right here at 29 versus maybe 34, made an extra 5 pips. And you can also take this buy here because it's at the 1.618. It's much more likely to give you a little bit more pips. In fact, you might have even bought this even before the buy signal, because most of the time, once the market's gone down 3 to 5 waves at the 1.618, it's going to get some kind of a bounce. You know, if you're risking 6 or 7 pips and you have a good chance of making 20, it's worth taking the shot. It's all about risk to reward and the probability of the trade working.